Hello, listeners. From Roy Damari of INSAM, speaking to you actually from Ambleside in the Lake District, where I've been meeting my students from Robert Kennedy College, and they've been learning how to work together in groups as a complement to their online work with me and others at Robert Kennedy College, actually in Zurich. Now, the negative things that were happening last week are still very much with us. But I find myself in a most unusual situation of having a degree, a very limited degree, I admit, with Trump's observations about China. I don't think he's got the right answer, but the problem he's identified is a real one. Many years ago, it was at least 3 years, it might have been 5, I read a book written by the then head of the FT office in Shanghai, in which he spoke about intellectual property in China. The image the book got across to me was that enterprises in China regularly, continually copied other people's designs. It was not so much at the level of the government that the contempt for intellectual property was shown or manifested, but at the level of the many thousands, hundreds of thousands of enterprises, actually privately held enterprises. The writer quoted the example of Japanese motorcycles. When a new Japanese motorcycle came onto the market in China, there would be hundreds, I think he said 1,000, but I'm not sure of that, of small enterprising firms in China who would reproduce that motorcycle in a matter of weeks. Quite extraordinary. And what they did was reverse engineering. Strip the product down, see how it's made, make it yourself, and then produce your own version of it at a lower price and sell it domestically in the Chinese market. And so they were showing a great deal of contempt for intellectual property. And this same attitude of if it's there, copy it, why not? There's no compunction amongst them about taking other people's designs. That is something we respect in the West, but they do not respect in China. And so to that extent, Trump is right to say that the Chinese have been copying, stealing, whatever verb you want to use, intellectual property in the form of designs of products in the West, and maybe indeed something much more serious like new technology. It will be a long and hard job to persuade the Chinese government to make the Chinese enterprises respect the law, the international intellectual property law, and the good practices that go with it. But hitting the Chinese government with tariffs is not the way to move forward, because that brings about so many negative consequences that it means that the USA will suffer as well. And I have to say, I do hope Europe keeps out of this particular war, tariff war as they call it, of tit for tat. I've already mentioned in these broadcasts of mine that the problem of a negative trade balance, of the huge proportions that exist for the United States, are a reflection in the first place of the internal deficit the country has. An internal deficit and an external deficit in trade go hand in hand. It took some time for me to really understand that, and I still don't think I do understand it properly, but it's there. And you cannot just say that we can solve that problem with barriers, trade barriers and tariffs to stop the imports coming. The fact is they will come because you've got this internal deficit, and that can be handled only by sensibly matching the revenues of the government to the expenditures of the government, and the same thing with the private sector. There is some further rather negative news this week in the story of Facebook and data being, as it were, misused or stolen by a company in Massachusetts called Cambridge Analytica to ostensibly help with the Trump election. That may or may not have an effect, but it's really made people worried about the data they supply to Facebook and that has resulted in the withdrawal of some advertising from that company, and indeed has fallen to a pretty sharp drop in their share price. And that drop in share price is of course also happening because of the trade war declared by Trump against the rest of the world, particularly with China, and which, as most people know, is not good for the world economy, and it's not even good for the US economy either. So we have these negative events, trade wars, Facebook losing favor, and a continued rise in the short end of the yield curve. That is a strange phenomenon also. These strange phenomena are worth looking at. Even as the short end of the yield curve is being pushed up by the Fed, the long end, 7, 10 years and so on, has actually fallen. It's a curve which is normally starts low and goes higher, and the low end is going up while the long end is going down. That is never a good sign. Now, that effect was identified 2 or 3 weeks ago by Harriet Dent and his friends, and I reported him on this program because it seemed most odd that he should recommend moving into Treasury bonds in the context of rising interest rates. But if he's right, and the long end is actually coming down, and it might come down because deflation is so low, it might come down because there's nothing much happening in the economy, because there's a trade war and things are just going wrong, then those long-term bonds will increase in value, because you need to remember, if you would, that yields, when they go down, push up prices and vice versa. I reckon that move for anybody wanting to invest was not a silly one, but it's certainly not one to put all your pennies into the one go. There is room for buying some long-term T-bonds in dollars, or even long-term bonds in European currencies as well. As for the stock market in its own right, apart from the falls which have taken place this week, there is every reason to suppose that there's not much money to be made in the stock market these days. There's much greater chance of it going down than going up. Now, there are sophisticated ways of trading, which are beyond me, which might let you make money even in a falling market, but no. Now, it's not all gloom and doom at this point in history, because there is some interesting news about going the opposite way when it comes to trade wars, namely that many African countries have got together to try and lower the tariffs between them, and that should help the African continent to become a bit more buoyant. I really hope so, and that is a trend which would reverse some of this Trumpian negative stuff about world trade. Let's hope on that. It also reflects something which I brought up last week, which is that there is a degree to which we now have to bypass this very inward-looking United States. They have their hegemony over us, looking at our bank accounts and things like that. But when it comes to trade deals and just moving forward with the economy, it is good and necessary to kind of work things out without them, because they've got such a negative impact as long as President Trump is the top man there. I think those things will change. I hope that the USA will come back and be a positive force for the world economy. But right now, we really have to kind of get round them. We can't do without them. We love Americans, but we can't say we love their economic policy under this president. I hope that by the time I broadcast again next week, more of this positive news, like the African agreement to have a kind of union when it comes to international trade, may there be more of that to offset the negative stuff coming out of the US. Speak to you again.